Polygon 2.0 is claiming to be a next-gen, hyper-productive, infinitely scalable blockchain through a series of upgrades. And with the new use cases for the new and improved Polygon, the team is also going to be migrating the Matic token into a new and improved POL token. However, with migrating Matic into POL, the team is also going ahead and lifting the 10 billion supply cap on Matic and going ahead with an infinite supply of POL, diluting current token holders of this project. So while the Polygon token supply is increasing, the Crow coin token supply is decreasing, as the community pool now has over 15 million Crow sitting in this wallet waiting to be burned and removed from the flow completely. You can expect to hear about all of this as well as an update on our XRP trade in today's daily market update. So hopping right in here with the market overview, the first thing I do want to mention is just a quick shout out really to anybody who did watch our Thursday video on XRP and take on the trade. You can see here we do have the timestamps. When we made this video, XRP was sitting at about 60 cents, and this was before the nice run up it had all the way to about 95 cents before cooling off back down to 80 cents. And unfortunately, while I did not sell there at that 95-cent pump, I did in fact decide to take full profits here at the 80-cent level for a nice 33% gain in just about a 2-hour time period. And we did go ahead and tweet all of that here. So if you are not following us yet on Twitter, if you do not have notifications on for the channel, please consider doing so, as that video was pretty time sensitive, and within a 2-hour period, about 33% gains were made. Now, I did also tweet here that I rolled all profits into Quant at the $105 level, as $100 does appear to be a very strong area of support for Quant, and one that I do feel comfortable stepping in and buying more of this project at. I do still believe that Quant does have that 100x potential for the next bull run. So a very successful trade there on XRP. Congratulations to everybody who did join us in taking on that trade. And just taking a look now at the broader market, I mean, we can see that Bitcoin is still up about 2.74% on the week, trying to break out of its yearly high. Ethereum is trying to break out above $2,000 at the moment. And while it definitely has been XRP's time to shine this week, up 65% here in the past 7 days and 63% in the past 24 hours, the biggest winner in the top 10 this year is in fact Solana, now sitting at $27.90. A couple of days ago, we were talking about Solana for breaking out above $21, and it actually peaked out at $30 here at some time yesterday. And this means now if you did buy Solana here, even on at the beginning of the year at the $10 zone, you are now up about 170% from that local bottom. So congratulations to you if you did pick up Solana in the high single digit to low double digit territory. And one chart that I do want to kind of run by you guys here before we take a look at Bitcoin and Ethereum is the total 3. And this is the crypto total market cap excluding both Bitcoin and Ethereum. And given that both Bitcoin and Ethereum do have that blue chip status, I think this is a very important chart to actually take a look at the overall health of the altcoin market. And what I'm taking a look for here when it comes to total 3 is I'm looking for a weekly close tomorrow above 358 billion. 358 bill is a very important line of support for total 3. That is where the altcoin market peaked back in 2018, and we did actually break below it here in briefly in June of 2022, but a lot of the reason it was saved from going below there was because Ethereum rallied hard into the merge. However, it was in November of last year with the collapse of FTX that the altcoin market broke below its 2018 all-time highs. Now, we actually were below it once again here in 2023, and Bitcoin dominance was on the rise, but XRP here completely changed the tide for total 3, and it is now back above the $358 billion level, currently sitting at 364. So what I'm looking for going into tomorrow's close is a close above 358 bill, and if that is the case, then I would expect to see the altcoin market once again make a more sustained move to the upside. Now, I do want to talk about Bitcoin here, because now that the XRP news has kind of came out there and we have seen the altcoin market rally, I think the next big catalyst for crypto, one that I am looking to trade off here, is the Bitcoin spot ETF pending approval. We know that some of these spot ETFs may be approved as early as August, and therefore I think in the meantime that any sort of dips we do see in the crypto market and when it comes to Bitcoin, I will be looking at as a buying opportunity. So to the upside, here is the one thing that I am looking for Bitcoin, and it's simply just a break above the yearly high. We actually did briefly see it yesterday as Bitcoin printed a new weekly or a new yearly high at about 31.7k. However, once again, it did fall back below it and is currently sitting at about 31.2. So if we can actually close a candle above this 31.7k level, I do believe Bitcoin is off to the races, and that 35,000 is the next area I will be looking for when it comes to Bitcoin. Now, as for Ethereum, it has actually been showing a lot more strength than Bitcoin, really ever since yesterday, or 2 days ago, sorry, when XRP did go ahead and rally. However, it is not as close to its yearly high, which does sit at about 2,100. So if we did see Total 3 close above that 2018 all-time high, if we could see Ethereum break out above 2,100, I do think that Ether could rally back up to 2,500, and that we could see a very nice move for the altcoin market. Now, to the downside for both Bitcoin and Ethereum, because I do think that is important to mention. When it comes to Bitcoin, I'm looking at the 200-week moving average, which is currently sitting at about 26.8k, and we also have the bull market support band sitting at about 27.3k. So if Bitcoin can actually backtest $27,000 and validate it as a level of support, you're going to notice here, if I zoom in, that would also go ahead and correspond with a bounce on our uptrending channel for Bitcoin, which it has been respecting since its rally year to date. And then as for Ethereum, if this trade does not go in our favor and if Ether does want to fall, I will be looking for support at the bull market support band, currently range bound at about $1,800. So that's what I'm looking for when it does come to the charts. The one other thing that I am kind of taking into consideration here is Bitcoin dominance, which has in fact had a pretty big decline over the past 2 days, down about 2.5%. And the one thing I'm looking for on Bitcoin dominance is if it can actually hold the line at 48.74%. If Bitcoin dominance can hold, let's just call it 49% even, this does still validate the thesis that Bitcoin dominance is going to rise, and that probably for the majority of this year and leading into the Bitcoin halving, that it will still be the best performer here, or the best performer versus the majority of crypto assets. Now, I do want to hop into the altcoin news now that we have given you an update on the charts, and I want to kind of start this off talking about Polygon 2.0. So, Polygon 2.0 is a series of upgrades being proposed for the Polygon blockchain, and the big one that I was actually looking for here were the upgrades that were promised to the Matic token. So, they say they are now introducing the POL token, a upgraded version of the Polygon original token, and POL is the next generation native token designed to secure, align, and grow the Polygon ecosystem. So you saw the video at the beginning. That is the new kind of proposal of what the POL token is meant to do. And it basically says here that if the community reaches consensus to adopt POL, Matic holders will have their tokens upgraded from Matic into POL in a 1-to-1 ratio. There will never be two native tokens. So POL is essentially going to be replacing Matic. So they say here that Bitcoin's BTC, although important and successful, is an unproductive token. Its holders cannot participate in the protocol and be rewarded for that. Highly disagree, but anyways, Ethereum's ETH is a productive token. Holders can become validators of the Ethereum blockchain and get ETH rewards and fees. And the reason I disagree with this Bitcoin statement, I mean, that's right, you can't participate in the protocol and get rewarded through staking because it's not a proof of stake token, it is proof of work with a hard supply cap of 21 mil, and that is the value of Bitcoin. Anyways, POL is the third generation of native assets, a hyper-productive token. Holders can become validators and receive rewards, but with two major improvements. So number one, validators can validate multiple chains, and number two, chain can offer multiple roles and corresponding rewards to validators. So effectively with Polygon 2.0, they are introducing this aspect of super chains, and basically what they're saying here now is that when you, this volume, let me turn that off, sorry. Now, what they're basically saying here is that when you actually stake your POL, you are powering all of the Polygon chains. So Polygon, ZK EVM, Polygon POS, and all of the Polygon SUBNETS. So taking a deeper look at the white paper, the one thing I was interested in taking a look at right off the bat when it came to POL is, would there be any changes to the tokenomics for this project? And unfortunately, that does appear to be the case. So let's take a look here at initial supply. So page 9. Now we're going to scroll down. It says right here, the initial supply of POL is 10 billion tokens. The entirety of the initial supply should be dedicated for migration from Matic to POL. This migration would need to take place in order for POL to succeed Matic as the native token of the Polygon ecosystem. The initial supply of POL matches the supply of Matic, which should make the migration quite straightforward. And we can actually see that if we go over to CoinMarketCap, we can in fact validate here that there is currently, it says 9.3 billion Matic in circulation, and the total supply is capped at 10 billion Matic. However, if we actually scroll down here and continue reading the emission, we can see here that POL is in fact going to be emitted beyond the 10 billion supply. This means that if you are a Matic token holder, there is no longer a hard cap on this project, and that you are going to be diluted here as they are going to be emitting POL for validator rewards and ecosystem support. So it says here, to incentivize validator onboarding and retention, POL should be continuously emitted at a predetermined rate and distributed to validators as the base protocol reward. We propose a yearly emission rate of 1% of the POL supply for this purpose. To provide ongoing support for further development and growth of the Polygon ecosystem, we propose to introduce the community treasury. And just like the emission for validator rewards, this emission rate can be decreased after 10 years via a governance framework, and it can never be increased beyond 1%. So effectively, between validator rewards and the ecosystem support, you are now looking at a 2% yearly emission and dilution of the Polygon token supply. And listen, 2% is really not a lot, especially when it does come to crypto. I mean, crypto does 2% in one candle. So I'm not trying to say that these 2% dilution is going to be a major deal. What I am trying to say is that I really don't like the way this was presented, as it's supposed to be an upgrade to tokenomics, when really in reality, although it might be an upgrade to the utility, it is in fact a downgrade to tokenomics, as there is no longer a hard supply cap. And I gotta say as well, you know, when I look at tokens, the first thing I look at is utility, but the second thing I look at is tokenomics. And most of the projects I am invested in, including Bitcoin, Ethereum, Quant, AVAX, these all have token supplies in the $1 million range, not even hitting a 1 billion supply cap. One exception here, of course, being Crowcoin, which we will talk about in a couple of minutes. But when it comes to Polygon having a 10 billion supply when there's already 9.3 bill in circulation, that is the second thing I look for, is what is the max supply, but how much is left to be brought into circulation. And a very important example of that I like to look at is something like Chainlink here. So Chainlink does have a max cap here of 1 billion link, but there's only 538 million link in the supply at the moment. And the reason you don't want this as a Chainlink holder is because it means that effectively over time, your Chainlink is going to be constantly diluted as more link is brought into the float. And this can be kind of seen and more demonstrated in the actual market cap of Link, which currently sits at 3.8 billion. However, if all of the Link was in the supply, you would in fact be looking at a fully diluted market cap of 7.1 billion. And that is not what you want as a token holder, is constant dilution over time. So when it comes to Polygon, although I was not a massive fan of the 10 billion supply, what I do like is that most of it is already in circulation. And you know, again, like taking a look at something like Quant with a 14.88 mil total supply with over 90% of that in circulation, meaning that dilution is going to be very minimal in the coming years. So what I tweeted here was POL, the next gen hyperproductive infinite scalability through superchains, insert more buzzwords here token. In reality, this means changing a Matic from a max supply of 10 bill to unlimited supply with added 2% yearly emission for validator rewards and community treasury. So, although never being invested in Matic, I have been bullish on the project and their ability to create key partnerships to bring Web3 to the masses. However, labeling Polygon 2.0 as a major upgrade while making the tokenomics worse is shady IMO. As it's significantly worse, they're not significantly worse, but they definitely are worse than before. They are basically mirroring Avalanche subnets and naming them Polygon superchains, and using this added utility as an excuse to change the supply cap from 10 bill to infinity, essentially. While AVAX still has a supply cap of 720 mil, I wonder how long it will take for the market to realize this. And the reason I opted to compare Polygon superchains to Avalanche is because they do sound very similar to AVAX or Avalanche subnets. So Avalanche subnets are their solution to blockchain scalability, actually offering infinite scalability of the Avalanche blockchain. Instead of forcing all transactions to take place on a single shared state, subnets allowed developers to launch their own blockchains, creating more block space and computation to meet demand. So simply put, subnets or subnetworks are a dynamic subset of Avalanche validators that reach consensus on their own blockchain. So what this means is you have the Avalanche primary network, which does also facilitate the creation of the subnets, which are highly customizable for institutions and enterprises. They can opt to make the blockchain private or public. They can opt to use the AVAX token as their native token, or use their very own token to power their subnet. And this effectively means that the Avalanche primary network is infinitely scalable. Now, the one catch for these subnets, something they all have in common, is that to open up a subnet, you have to actually stake 2,000 AVAX to do so. And that is very bullish for the AVAX tokenomics, in my opinion, because it means for these companies, for anybody to open their own subnet, they have to actually lock up that 2,000 AVAX. And this 2,000 AVAX does in fact help validate the primary network. So the primary network facilitates the creation of the subnets, which all run on their very own transactions. They don't actually cut into each other, and this means they are not competing for space, for blockchain space, block space, whatever, which effectively means that AVAX and the Avalanche blockchain does have that infinite scalability. Now, we can see here that while Polygon is using superchains as a reason to increase the supply, AVAX here has actually burned 2.5 mil since launch. So AVAX is a hard-capped, scarce asset that is used to pay for gas, and all fees are burned and removed from circulation, which we can actually burn over here, or we can actually track over here at burnedavax.com. And you can see right here it's at 2.5 mil AVAX, or about 38.2 million worth. And we're going to talk about burns more in a second when we actually do get on over to the CrowCoin news segment. But I do also want to mention that a lot of big companies and enterprises do see the potential of Avalanche subnets, including AWS, who partnered up with Avalanche to scale blockchain solutions for governments and enterprises. We also saw the launch of Avalanche Evergreen subnets to drive on-chain finance innovation, which did see participants from institutions like T. Rowe Price Associates, WisdomTree, Wellington Management, and Cumberland. Participating institutions will be using Spruce as a testnet for a variety of applications and assets to measure the benefits of on-chain trade execution and settlement. The Spruce testnet is meant to enable buy and sell side institutions to engage with public blockchain infrastructure in a low-risk, low-barrier to entry manner. So institutional partners use DeFi applications on Spruce to basically execute forex trades and interest rate swaps with other areas in active research and development. Future phases of Spruce will welcome additional third-party applications, assets, and processes, including the exploration of tokenized equity and credit issuance, trading, and fund management. So the head of digital assets at WisdomTree says, "We believe tokenization and blockchain will play an important role in financial services going forward, and Avalanche Spruce provides an opportunity to further explore the potential efficiencies and benefits of on-chain trading and settlement with other financial institutions. We are looking looking forward to experimenting in this EVM-based test environment. And we also saw here the Director of Digital Assets and Tokenization at Wellington Management says Avalanche subnets provide a potential settlement solution that enables financial transactions with enhanced operational efficiencies, reduced risks, and regulatory compliance without creating liquidity islands or reduced interoperability. We're getting tight on time, so I do want to move into the final segment, which is going to be the CRO-Coin portion of this video. And the one thing I do want to mention is I have been keeping an eye on the burn wallet, which has now passed the 15 million CRO waiting to be burned. And this is currently equivalent to about $927,000 worth of CRO. And we can very easily be at 1 million USD worth of CRO burned before the end of this year. So I think this is definitely a step in the right direction for CRO-Coin to kind of see some of it being burned and removed from the flow completely. I think that having a circulating supply of 26 bill and a total supply of 30 bill has definitely been a bit of a hamper on the price action as of late. And yeah, I mean, you can see here that when there was a lot of hype for CRO, when we saw, you know, the Crypto.com staples arena, the bull market with tons of liquidity, CRO-Coin was a very fast mover to the upside. But when we are in an accumulation phase here, when there's just simply not as much liquidity flying around, it is very hard for people to kind of purchase enough CRO to move the market with that massive outstanding supply. So the fact that 15 million CRO are now waiting to be burned, I do think is very good for the CRO-Coin ecosystem as a whole, and I do really hope to see some more significant burns take place in the future. I mean, keep in mind here that back in 2021, we actually saw Crypto.com burn off 70 billion CRO. That reduced the supply from 100 bill down to 30 bill, and that was actually the beginning of a massive run-up that we did see for CRO throughout the entirety of that year. But we can see here that the CRO-Coin burn in early February 2021, CRO-Coin was at about 6.5 cents, and after the burn actually took place, CRO was up at about 23 cents, and then we saw the Stables Arena hype, we saw that run up to 95 cents. But the point is here is that if we could see bigger burns in the future, I believe that would be very bullish for the price action of CRO-Coin. So on that note, if you did enjoy the content in today's video, you know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I am wishing you all a happy Saturday and an amazing weekend ahead, and I hope to catch you in the next one. Peace out for now.